Morning, all, or afternoon, wherever you're at. Welcome to the Node. I am Mike, aka Veteran Crypto, and this is your place for crypto, DeFi, and TradFi news, interviews, and education. So, with that, while we're waiting for David, we'll go ahead and jump on into introducing our socials. So, oh, good evening. I guess that's true. Depending on where you're at in the world, it might be evening. So, welcome. So, really quick, if you want to come on over here and check out our YouTube channel, if you want to join the chat, if you want to ask questions, if you want to tell us we're full of shit, whatever, come on over. We welcome all all points of view here. No matter if you agree with us or not. So, come on over to at the Node Network, all one word, and we truly are a network. So if you scroll down, I mean, you're going to see all of our shorts and things like that. But here is, the show that you're watching now, The Node. It is Monday through Friday at 9 a.m. to 11 a.m. Pacific Standard Time. If you want to check out Crypto and Chill with myself and Jeff, that is Tuesdays and Fridays at 5 p.m. The Blockchain Report with Jeff, where he does deep dives into new projects. So some of them haven't even had token generation events yet. So they might not even have a token, but it's a good way to educate yourself on new projects that might be coming out and what it is that they're doing. There's David. Let's add him to the stage. And another channel that we have is Sovereign Soil. That's sometimes my solo show, but Jay, a member of our community, buddy of mine, has started joining, and he's into emergency prep and very interested in homesteading. And we basically just talk about our experiences. I was in the military for over 20 years, and been homesteading for over a decade, and been into emergency prep for over 20 years. And so we just talk about and share our knowledge. So if you're kind of getting into that, if you've been into it for a while, the last episode was really great. We actually kind of played devil's advocate, as far as picking apart each other's prep. So he broke down his prep and the equipment he had, what his plan was, and I picked it apart. I told him where the flaws were at. He did the same for mine. So his was to bug out. Mine is to bug in. I had some flaws in mine because I built out my prep for myself, but potentially, me and Jay have been talking, and a couple of other members of the community, and even David about and Jeff about potentially starting a little community. So if that's the case, I need to tweak my prep. I need to start looking at ways to make it multi-person instead of just me. So you always have to be reassessing, looking at your plan, because ultimately your life and your families and loved ones' lives could depend on it. The market wrap. So daily at 1 p.m. Pacific, 4 p.m. Eastern, David does a wrap up of the markets with a technical analysis. So about 15 to 20 minutes. And then on Tuesdays and Thursdays, he does coaching with Ellie, a member of our community, and is taking her through his coaching course. So that's been very informative, and I've actually been enjoying watching that. Usually I'm behind the scenes on the sticks, and helping out, just so that David doesn't have to multitask. He can focus on the lesson, and it allows me to learn from it. There's always something more to learn. No matter how much you think that you know about something, there's always more to learn. Saturday Night Fever is Jeff. Jeff is a DJ in the San Francisco Bay Area. So he has been doing a bunch of interviews with other DJs. They do tutorials and they spin music. So if you're interested in that style of music, it's a great place to hang out on Saturday night if you just want some background noise, or if you actually want to sit and watch the interviews. The Red Pill on Thursdays at 6 p.m. Pacific time. That's pretty much just 4 or 6 of us. It kind of varies, and we just have different hot topics. So all those topics that you're not supposed to talk about, we talk about them. Politics, religion, relationships, guns. The recent not declassification, but reclassification of marijuana from a Schedule 3 to a Schedule 1 narcotic. and legalization of some psychedelics for medicinal purposes by the Trump administration. So that was actually really interesting to see. So we just got done talking about that, and then gaming and chill. So Jay and Ellie again from our community, and they're both in the chat right now. Uh, Sometimes we play Arc Raiders, sometimes we'll play other games, but on Wednesdays and Sundays at 6 p.m. we get together and just hang out and and play games. So if you want to come hang out, if you play the games and you want to join us sometime, join our Discord. Get to know the community, get to know the people, and if you're good people, maybe we'll throw you an invite, and you can come game with us. So a lot of really cool things going on, as far as little something for everybody, here on the Node Network. If you want to follow us on X, it is at the Node_network. So we had to throw an underscore. Somebody already had the Node Network. And if you want to find everything that we have to offer, it is the node of the node. It's where everything comes together. You can find, like here on the homepage, if you want to find your starting point as far as your education or anything like that, then click this, answer a couple of quick questions, and you'll be able to start your journey. We have a lot of no cost material, educational material, community, all of it. We have most of it is no cost. We truly and genuinely just want to help all of you out there be successful. I know that I started my journey about a year and a half, 2 years ago in DeFi, and a little over 5 years ago in crypto. And I had to make a lot of mistakes because everybody out there was either shilling things to because they were incentivized to do so, or they were charging crazy amounts of money to learn how to do DeFi and things like that. So I had to learn on my own because I wasn't going to pay $5,000 or $10,000 to get a basic education on DeFi. We offer the entry, intermediate, and some advanced at no charge. We you know give us a test drive. Look, test out the quality of our material. If you want to take it to the next level and you want to be a professional DeFi investor, then yes, we do have some paid services. But you can also find our programming. This is our schedule. You can see in the gold is all of our shows that we have during the daytime. You can see Monday through Friday, we have multiple shows throughout the day, all of which, except the blockchain report, are live shows. You can join the chat, ask questions. The red are all evening shows. And then the purple are David's a school where it is a $99 a month. You can be a member of the community and join a it's a smaller group. Usually it's about 20 or 30 people that I've noticed in there. And but it's a live call to where it's a video call where everybody is in there. They're sharing their knowledge and information. You can find mentors in there. So find somebody that you resonate with or align with as far as your risk tolerance, what you're trying to accomplish with your investing. I cannot stress the importance of finding a mentor that can help guide you and navigate the waters to avoid costly mistakes.
And Mike, that call, it's 3 times a week. So Monday, Wednesday, and Friday. And those calls are at 5 p.m. Eastern or 2 p.m. Pacific. And those calls I'm going to bring to the Discord and to the YouTube channel. Hopefully, I'll be able to do that today. As we speak, I'm working on pushing to production the new store. So that's going to be pretty cool. Should be live here in a couple of minutes. So yeah, those calls are going to be not just in the school community, but also in the Discord and in the YouTube. So those are going to be hopefully launched today.
Oh, awesome. And we have the newsletter. Well, actually, I'll get to that. Again, we have the courses. This is no cost. There's no gimmicks, no catches, anything like that. Just come here. You can, if you're a beginner, click here. If you're intermediate, click there. If you're advanced, click there. And you can go through and you'll learn everything from fiat, the history of fiat to to the traditional TradFi or banking systems. You'll learn about the basics of crypto and wallets, how to use hot and cold wallets, how to use centralized exchanges, decentralized exchanges and protocols, advanced strategies, you name it. It's all in there, and again, at no cost. We genuinely just want to help you learn. Community. I cannot stress again. Mentorship is vitally important, but just a community of your peers. Our Discord is curated by Scotty D and Ellie and Jay and myself, Jeff. One of us is almost always in there, and we weed out manually. We weed out the riffraff. Anybody that tries to spam, anybody that tries to scam, they're gone. So, but if you have a question, if you just want a couple of laughs, if you just want to hang out, like I said, we're always in there. So, feel free to click on join the Discord. And again, no cost. We don't. There's It's a point that we try to make here is that we want to make sure that there's plenty of no cost value for you here. The coaching. So, like I said, Tuesdays and Thursdays, David Live with Ellie is going through his coaching program. If it's something that you're interested in, if you want to accelerate and get up to speed faster on DeFi, and you want that bespoke one-on-one mentorship in coaching, then this might be for you. So if you want to have a no cost initial consultation, put your email in here. David will reach out, schedule a time that works for you, and basically find out where you're at, education wise, risk
So,
tolerance wise. Go ahead.
so Mike, the way that thing works right there is all someone needs to do is literally click three buttons, put in their email address, and then they can book a discovery call on
Oh, okay.
my calendar.
All right.
So I don't reach out until after someone has scheduled a couple of minutes. So
Gotcha. All right. Perfect. And then DeFi safety checklist. I like that. There's a little pop up. All right. And then this is what I've been waiting for forever. This is our AI generated newsletter, and I can't stress enough that and I'll show it. I'll show it to you here in a second. It's $20 a month. It is head and shoulders above the old newsletter that I was putting out, where I was spending an hour to an hour and a half going through and trying to find good new really good news and links and things like that, and then giving the prices and trying to give ranges that I felt that that I was using, and just to kind of help out the community. This is so much more. So this right here, you can get a preview or a sample. You're only able in the sample to pick 3 assets. So you can put in your email, do a preview. You can watch it generating, and boom. So let's see. Oh, where'd it go? Looks like it didn't. Looks like it didn't generate.
yeah, no, I know, and it also it failed to send to my inbox this morning.
Oh, okay.
Yeah,
Well,
I was just looking for it. So it looks like it broke. It broke overnight.
all right. All right. Well, it's usually it's working. Again, just try out the sample. It still gives great information with the sample. So
I
you
just
know,
need to get it working.
well, just I definitely until we get the bugs worked out, I definitely don't want anybody paying for it. So keep using the sample. While we work the bugs out. We just barely a couple of days ago felt like it was worth starting to tell really push and tell people about, because it was finally to a point to where we felt the data was reliable. That we were going through looking at the data, and it was giving good solid alpha. So all right.
And then it broke.
And then it broke. All right.
Yeah.
So let's actually get into the news. Let's see. So let's see. Looks like Bitcoin has successfully breached a major psychological and technical ceiling. signaling potential shift from a range-bound market to a trending one. So BTC USDT broke through the dominance story. BTC dominance has surged to a multi-year high of 61.3%, while altcoins are showing early signs of stabilization. The market remains heavily skewed towards the king of crypto. With the 82K level flipped to support, traders are eyeing 92K as the next major objective based on the short-term holder cost basis. Bitcoin Core developers recently patched a high severity memory bug. While the patch was quiet, the risk remains for nodes that haven't updated, highlighting the ongoing technical maintenance required for the quote unquote digital gold. As far as those levels, David, that were mentioned, is that what you're watching? I mean, do you feel that 82K is flipped to support? And are you looking at 92K for the next level?
No. But we can take
No,
a look at that.
yeah, no, definitely.
Yeah, so the thing for me is I'm watching Bitcoin, obviously, of course, but I'm also watching stocks. And this type of a move here going straight up, on the back of exuberance around the AI trade again, makes me think, well, what happens when there's some type of even small dip? I mean, stocks have been up every day for like a month, a little bit more than a month. We're talking about 5 weeks now. It's basically been 5 weeks of just straight up. So, look, Bitcoin has been playing catch up, and it's great to see Bitcoin rally up to its 200-day moving average. But here's the thing, this is still the amount of time that it has been since the all-time high. If 60K turns out to be the trough for the bear, then that would make it the shallowest Bitcoin bear market ever and the shortest in time Bitcoin bear market ever.
Mm.
So, I was thinking about this too yesterday and last night, Mike. So, what do you think about this? You know that saying where people say, this time it's different? And then, I was always saying, like, well, this time it's not different, but maybe I was wrong to say that because, like, statistically speaking, every new iteration is different.
Yeah.
Like, what's happening now can't be the same as what happened yesterday or last bear.
Well, too many
So,
variables have changed. I mean,
yeah,
we're getting legislation. Institutions are adopting and building. That this isn't the full retail driven emotional market that it's been historically. So, I mean, how far we are down that road, that can be debated. But the fact is anytime there's new data, or new factors, new fundamentals, anything like that, you have to factor that in, and it's undeniable that that the ecosystem has changed. The crypto ecosystem has changed.
yeah, no doubt about it. But here's the thing, though. Even though it's changed, when I take a look at this pattern, this looks identical to the 2022 pattern,
Mhm.
where Bitcoin tagged its 200-day moving average, got rejected. That led into the next couple of months down. It looks very, very similar. It really, really does.
Let
So
me
if
ask you
this,
this, David,
yeah,
really quick. I'm sorry, really quick, because it's something I don't have multiple cycles under my belt. So I'm asking this. Um, when it comes to we've been keeping our eye on Tron, we've been keeping our eye on Canton, we've been keeping our eye on Hype, and these assets that seem to be moving independently from Bitcoin. Do you feel that as utility is realized more and more, that we're going to see a decoupling of high quality alts moving independently from Bitcoin?
probably.
Okay.
Yeah, at some point. So if we take a look at something like Tron in Bitcoin terms, let's just take a look at this one. So TRX, this one has outperformed Bitcoin for basically the last 2 years or so,
Hmm.
and especially the outperformance really accelerated during the start of the Bitcoin bear market right
Yeah.
here. So Tron outperforming BTC. If we take a look at Hype in Bitcoin terms. Here's hype in Bitcoin terms. It actually broke out to fresh all-time highs and then held on to that breakout, held on to those gains. So this was the old all-time high. That was resistance. When it broke, it flipped and became support, and it's held as support. So, hype, and this is outperformance. Up and to the right means hype outperforming Bitcoin. The weird thing about that, though, is if you just take a look at hype over the last, call it like the last year or so, well, you could just even say from December 2024 to today, if you bought hype in December 2024, you're flat. It's moved sideways for you.
Yeah.
So that was just something that I just kind of noticed the other day. And then, you take a look at Canton, CC, in US dollar terms. So this one, I think that this token really could like moon, like rip
Mm.
higher. They just need to get to equilibrium. And if or when that happens, then I think this thing really runs. And if we take a look at this in Bitcoin terms, well, here's CC in Bitcoin terms. And hey, you know what? Even though it started to, you know, basically like move sideways a little bit here, it has outperformed. So up and to the right in Bitcoin terms means outperformance. So Canton has outperformed Bitcoin. Those are the three.
What about Tau?
Tron.
Because the other day I actually put some money into Tau, and already I'm up like 30%.
Yeah, yeah. So Tau here, Tau is definitely an interesting protocol, no doubt about it. And there's a great use case for this decentralized AI compute. And if we go ahead and price this thing in Bitcoin terms, then what you'll see is it's started to perk up. It held on to its 200-day moving average, which is a good sign. And it's got some resistance, up a little ways here. So Tau could definitely run. But again, which of these tokens is really going to decouple from Bitcoin? Is it going to be Tron, Hype, Tau, Canton? Which of those four? I think potentially all four of them. And ETH could decouple too at some point, but ETH
He's been struggling.
ETH has really been struggling. And if we take a look at, ETH in Bitcoin terms, and, ETH BTC right here, this is a trade that, I showed Ellie how to enter this trade during one of the private coaching sessions, I think 2 weeks ago. And this has been paying, this has been working out really well. So, ETH BTC, ETH has done nothing but lose value in Bitcoin terms
Yeah.
basically since the end of the last bear market.
Mhm.
So yeah, that's been interesting to watch. While you've got Canton, Tron, Hype, Tau outperforming Bitcoin, the second largest digital asset by market cap, Ethereum, has been underperforming Bitcoin. So interesting to see that. But here's the thing, though, Mike. Like these altcoins that we were just taking a look at, if they continue to remain decoupled from BTC and outperforming BTC, then we could see Bitcoin get rejected at this 200-day moving average, and those alts might actually move sideways in against their US dollar pairs.
Mm.
So, this is definitely an interesting level to be thinking about entering shorts. And that's exactly what I'm thinking about doing. I haven't pulled the trigger yet. But this breakout above this trend line resistance that we've been watching for weeks now, well, actually for several months. This is a 1 hour chart that I've zoomed into. There's that low from the beginning of February. Here's the flag that was painted. And now here's the breakout above resistance, but there's no structure up here. This is just kind of a, like drifting up and then tagged or got very, very close to that 200-day moving average. I'd be curious to find out, how many, tens of millions or hundreds of millions of dollars of short orders there are resting up here at 84K.
Check the
Because
heat on, like,
yeah, so
I think it's Glassnode or something like that.
is it Coin Glass or
I think it's
Glass
Glass. I think it's
Coin
Coin.
Glass? Yeah, I think it's Coin Glass.
I actually saw a post where it looked like, I don't know which time frame they were looking at, but it looked like there was massive amounts of shorts stacked up.
Yeah, so if I've got the liquidation heat map up here, it looks as though a lot of shorts, just in the last day have gotten liquidated up here.
Okay.
So on the rally above 81K, basically like above 81.7, that rally over the last 48 hours or so, that rally definitely did. Well, not even the last 48 hours. We're talking about like the last 12 hours. That
Yeah, yeah.
rally,
The most
yeah,
I saw was yesterday, so it looks like they took out that liquidity. So it looks like they might be going for that lower liquidity there
yeah.
next.
So now that this has been taken out, if we, I don't know if it'll let me go from 24 to 48. It wants me to log in. So the thing for me though is there's probably going to be a rejection from the 200-day moving average because hey, if we're still in a Bitcoin bear market, and I was listening to Ben Cowan the other day, Mike, and what he was saying was, when does it make sense to take off the bear goggles? The bear market goggles.
Did you say beer goggles or bear
No,
goggles?
bear. Yeah. So like when does it make sense to stop being a bear? You know, um, because right now today, Bitcoin, having been up for a moment near 83K, is just kind of resting at 81.6. It basically tagged that 200-day moving average. Very poor structure on the breakout. If this thing dumps and pushes back down below trend line support here, that would make this a big false breakout. That would start to look kind of bearish. And then I'd start to think, okay, maybe 69K is the target. So that's what I'm thinking about here. And I'm not going to lie, man, I'm itching to enter a short. That's, I really, really want to enter a short position right now. Um, so yeah, that's what I'm thinking about. And when I take a look at these altcoins, look, Solana bounced off of trend line support here, but so far this rally has been pretty weak. The real resistance is up here at 97. If we just take a look down the list real quick, Sui definitely, nice bounce today, but has already given back most of it. So SUI was up at $1.03, now trading back down below 99 cents. XRP, another one of the shitters, this one, nice bounce today. It was up at $1.45, but has given back most of it. Arbitrum bounced off of this is a 200 period moving average. We're looking at a 4 hour. So, basically Arbitrum has put in a nice decent bounce here, from April into the beginning of May. But now that it's kind of flagged off, I think that this is a meaningless token for right now, anyway. So I wouldn't be surprised to see this one roll over and push lower. Aave, after all of that,
Are
all of the
you showing
drama.
a chart? You're still in the heat map.
Oh man, yeah. So I
Sorry,
wanted to.
sorry. I was in the chat. Go ahead. There
Yeah,
you
so here's Aave. This token has been through a lot of drama over the last the last
go.
couple
That's
of
putting
months
it
here.
lightly.
Yeah, yeah, so but didn't even really get a bounce. The other tokens that we were just looking at that I didn't have an opportunity to show everyone because I wasn't sharing the right screen. Sui, nice bounce, but is giving back most of it. Same
Hmm.
thing with XRP, nice bounce, giving it back. Arbitrum, nice bounce and holding on to some of it. Aave, not
Not
really much of a bounce.
not financial advice, but be very, very weary of XRP. One, because of how high the market cap already is. There's not a whole lot of reward relative to the risk. The tokenomics are terrible, and it is severely overhyped. I mean, it's always max hyped. So it's just be very, very careful with that one. I see a lot more downside potential than I do upside.
Me too. I agree 100%. If we're taking a look at BNB, here's BNB, really nice bounce over the last couple of hours in BNB, but just like most of the other alts, it's given back about half of it. Arrow up at 46 cents, and Arrow has resistance up here at 63 cents. That's a long ways away. Support down below at the 200 period moving average at 40 cents. Here's Fartcoin. Fartcoin putting in a Nice rally today, plus 10% on the session, and also breaking out to a little fresh high here. Structure starting to turn a little bit for Fartcoin, but I can't get behind a meme coin. BitTensor Tau, Mike, this
Or,
one, nice move today to the upside out of BitTensor Tau. A lot of alts
well,
are.
Morpho's been doing really well lately.
Let's take a look at Morpho.
I know
Morpho.
I'm up 53% on my
Oh yeah, this is looking pretty good too. This one could continue to run up to like $2.90. That looks like a decent target on the upside for Morpho if it continues to run.
I
Um,
really think once a lot of that institutional confidence is restored in DeFi, because I actually have some news articles if we get to them where institutions are shaken a little bit by the whole Aave exploit, because they had a lot of liquidity there. There was a lot of really big names that had liquidity there, and so I think that they're hitting the pause button, for a minute. They kind of want to see how all this shakes out, and I think that they're taking a much more a closer, more analytical look at the architecture of some of these protocols, and I think Morpho may end up attracting a lot of liquidity. And I think that this chart is showing a little bit of that. That people understand the exploit on Aave and that pooled liquidity, and they like the Morpho architecture better. So
Look at how crude rolled over
yeah,
the last couple of days here. Going from all the way up here above $100. It was up at 110 at one point. Earlier today, down at $88 and change. So crude rolling over. We take a look at yields just real quick. Yields have pared back some of their gains from earlier in the week. And if we take a look at long end yields, back down below 5%, 4.94%. So that level turning out to be a significant level of resistance for yields. So that must mean that if yields are down, bonds are bid. So if we take a look at ZB, this is 30-year bonds. These are bid and bid at support too. So you might see. Here's the thing: you might actually expect that there would be a little bit of a rally out of bonds here. And so if there's a rally out of bonds, that means yields down. Now, what could be a catalyst for a rally out of, a more of a risk off type asset in bonds? Well, I mean, look, the stock market is going gangbusters, straight up. So if the stock market ever decides that it wants to correct even just a little bit, then maybe yields fall, bonds get bid, and I think that would probably hurt crypto pretty bad. And that could be enough just to give us that next leg down. But when to take off the bear goggles? Like when do you decide that, hey, you know what, it no longer makes sense to be a bear? And the ADP numbers that I saw, Mike, earlier this morning for employment, that's the private gauge of employment or unemployment, depending on how you want to talk about it. Those ADP numbers looked like they were phenomenally good, where the economy is just, adding a lot of private sector jobs. So, like, if the big tech companies and many S&P components are seeing their earnings grow double digits this year, and job growth looks pretty solid. And what is there to be bearish about? Well, you can definitely be bearish about private credit. You can be bearish about the massive amount of spend that these, big tech companies are throwing out there, all that capex to build
well,
out these AI data centers.
and understanding the kind of, I don't want to call it a bubble, but the issues with the private credit market right now is critical.
Yeah, well, I mean, understanding the issues, yes, but also, like, will it have a big impact if something blows up? And I think the answer is probably yes. Um, so it's difficult right now to really be a bear but I think that's probably when you want to be bearish. Like, does it make sense with stocks at all-time highs to be chasing this rally?
Well, I mean,
I don't
all the
know.
best investors always say, be bearish when everyone's bullish, be bullish when everyone's bearish. When there's buy when there's blood in the streets. When there's euphoria, sell. That's do the opposite of what the masses do, and you're probably gonna more often than not you're gonna be successful.
So here's something that has served me well. Whenever a trade feels uncomfortable, it's usually right. So when
In
a
life,
trade
a lot of
feels,
times when something feels uncomfortable, it's usually not always, but usually when you push yourself out of your comfort zone, good things can happen.
yeah, well, this trade that I want to enter on BTC, it feels uncomfortable. It feels like I should be trying to chase this rally. But if it's still a Bitcoin bear market, well, then this is the entry for the short trade that I've been waiting for. And I've been talking about this for weeks. And now that Bitcoin is up here, it's like, oh man, now it's time to pull the trigger. And it's kind of tough to pull the trigger, but I really, really want to pull the trigger and enter this short. So I think what I'm going to do is just taking a look at this chart of BTC just real quick. I know that that 200-day moving average comes in right around right here at like 84K. I might be just a little bit too early to enter the short. Now, what are the catalysts throughout the rest of the week? We've got, I think on Friday, isn't it the first Friday of the month? Don't we get the payroll print on Friday? Do we get some type of CPI data? I'm just thinking about what are the catalysts? What are the catalysts that could move markets over the next couple of days? I'm pretty sure it's payroll. I don't know if we get CPI or not. But I think that people probably should start caring about inflation again. So
I was
we'll
actually
see.
watching some stuff on Hoflation recently.
On Hoflation.
Hoflation, they were tracking the inflation on hose around the world, and I guess down in Colombia that the price of hose has gone up. Over in Europe, the price of hose have gone up. In Southeast Asia, though, it's flat. And, hoflation is flat over in Southeast Asia.
That's funny, man. So you see what Crispy said? He said ISM. So that's something that's interesting to me because it looks like it's really starting to move above 50 durably. So, that's manufacturing. That's a gauge of manufacturing. So if we've got like manufacturing returning to the United States and ISM is durably above 50, well, that has historically been positively correlated with Bitcoin parabolic rallies. Like that's when you get the parabola is when ISM is durably above 50. So, at what point do I say to myself, hey, I'm wrong about being a bear? When would I say that? Um, well, definitely for stocks, I've been wrong to be bearish. But, Mr. Tom Lee has said just recently, if we're talking about stocks, that he expected the S&P to get up to 7,300 and then correct by 20% into the summer. Like that was his expectation. Now, I have no idea what the catalyst would be for a 20% correction out of the S&P. I have a couple of guesses. It could be something to do with the bond market. It could be something to do with inflation. It could be something to do with a geopolitical catalyst. Maybe Iran decides that they want to do something extra crazy. Who knows what it could be? But what I do know is that stocks having run straight up for 5 weeks, they got to take a breather at some point. Volatility has completely just mean reverted back down below that 200-day moving average. And that means that it could be about time for vol to start to expand again. And, it looks like we're getting close to a low. So, one thing about volatility is that it's mean reverting, but we've also seen volatility over the last several years put in higher lows. So this is, volatility expanding and just putting in higher lows. I mean, the all-time low. I'm not sure if this was all-time, but this is a low level. 12 12 on the VIX is
Low,
like the
low,
lowest. It's super low.
super low.
Yeah, man. So
Like very white low.
so
So,
that's just
so
what I'm looking at here.
Paulo's asking if you think that Tom Lee is an ETH permabull.
I think that he's got a good reason to be an ETH permabull, seeing as how his firm has bought billions and billions of dollars of Ethereum and is actively staking it and validating the network. It would make sense that he would be an Ethereum bull. So, yeah, and that's great. I think Ethereum needs cheerleaders like Tom Lee. Ethereum needs its own version of Michael Saylor. Um, so, yeah, there's nothing wrong with Tom Lee being a perma bull, but he actually has come out and sounded a little bit less perma bullish on stocks recently, which is surprising to me because I've almost never heard Tom Lee say that he expects a correction in stocks. It's always only been up only. That's what he's been saying for a long time. And
Well, more names and such says he didn't see any BMNR selling ETH headlines today.
yeah, Bitminer, so BMNR. Here's the stock on a daily. And the thing that Tom Lee needs is trading volume. So as long as he's got trading volume, he can sell his shares at the money to buy more ETH. Which, I mean, honestly, that's a I don't like that. If you're selling your equity for cash to buy ETH, um, and then you're like convincing your shareholders that being diluted is okay because you're getting more ETH per share.
Mhm.
The only way that that works is if ETH like number go up in a big way. So I hope it does. I hope it does work out. BMNR trading well below its 200-day moving average. The 200-day moving average comes in at $35. It's trading for $23. And Ethereum, it just continues to lag Bitcoin. This
Well,
is ETH underperforming Bitcoin.
well, on that note, on the ETH note, we got about 15 minutes left before the deep dive. Actually, what do you got for the deep dive, or do we want the community to give us some shout outs on what they want?
I'd love to hear from the community, but what I've got in the works right now is I want to talk through the privacy tokens, the
Okay,
privacy coins. So I want to take a look at Monero and Zcash
okay,
because there's been a lot of excitement on Crypto X about those two recently.
all right. Well, we got about 15 minutes, and I definitely I want to touch on this one. So it says Ethereum, the Glamour's Dam era. So the Ethereum ecosystem, and I think we can all agree with this, is transitioning from a retail playground to an enterprise grade settlement layer with major protocol shifts on the horizon. Consensus CEO Joseph Lubin announced a 30,000 ETH contribution to the DeFi United initiative, pushing the total effort past the 300 million that was exploited. Lubin is positioning Ethereum as the natural home for the 700 trillion global financial market. The Glamour's Dam update, scheduled for H1 of 2026. This upgrade is the main fundamental catalyst. It introduces proposer builder separation, PBS, designed to improve layer one scaling and make gas fees more predictable for institutional users. DATS, digital asset treasuries, a new class of companies, Strategy, Bitmine, SharpLink, is emerging as long term stewards of ETH, aimed at providing Russell 1000 stocks and treasuries as a neutral, secure place to sit on chain. USDC liquidity. Circle minted 750 million USDC on Solana in the last 24 hours, signaling a massive injection of stablecoin liquidity into the DeFi ecosystem. So I know that DeFi has been hit hard. It is not going anywhere. This is just the beginning, and this is kind of proof of that. It's these institutions are moving forward. They are going to continue to build out these rails. that's why I'm kind of bullish on things like Canton. Yes, it's not necessarily fully decentralized. Yes, it's geared for institutions, but you know what? It doesn't have a lot of the flaws that a lot of these decentralized protocols and chains that we thought were decentralized, but with all the freezing and stuff like that on Arbitrum and a lot of these other protocols and chains that we thought were decentralized, are they truly decentralized? you know so
Yeah, potentially, maybe not. Um, just taking a look at these privacy tokens real quick, though, XMR has performed pretty well over the last couple of years. Up from $100 to $400 with a high up there at 800. And if we take a look at Zcash, ZEC, this one has really been ripping and running over the last couple of sessions here. But
you said during the second half of the show that you had a bunch of privacy coin stuff, right?
yeah, yeah, I do. I hadn't taken a look at the charts of either of these in a while,
Oh,
and
gotcha.
can't
Well,
believe
yeah,
can't believe Zcash was running.
we'll definitely have plenty of time.
So Glamsterdam,
Well,
that upgrade.
yeah, and I got some. Well, yeah, actually, give me your input on that. And then I got some regulatory and institutional stuff to share. I just want to make sure we get to it before the second half.
So I guess what they're saying is that Glamsterdam is going to be like a major hard fork upgrade, and I think it's focused on efficiency and lowering transaction costs. So Mike, when I was working with Ellie yesterday, and we were just putting on a position on ETH mainnet, um, the user experience on ETH mainnet is really horrible. It's
Yeah.
it's really really horrible. It's expensive. It's really slow, um, and so like if you're a small retail trader or small retail investor, and you don't want exposure to a layer two, and you want to be able to operate on mainnet because hey, let's be honest, that's where a lot of the great opportunities live is on ETH mainnet. It's not always going to be that there's some great opportunity on a layer two. A lot of the
Like
time,
base or something
liquidity
like
is,
that. Yeah.
yeah, the interest rate R plays, a lot of them are on mainnet. And if if Ethereum is competing with Solana and the Rust ecosystem and with Sui, the Move ecosystem, and potentially soon with Bitcoin, the layer twos, a cryptographic ecosystem, and even with Canton, the Canton chain. If Ethereum needs to compete with these other chains, and Ethereum is really slow and really expensive, well then, who wants to operate on the mainnet? Is that just for institutional capital, the mainnet? Why can't retail investors operate on the mainnet too? So, yeah, it's do as I say, not as I do. That's funny. Yeah. Well, I mean, so what we were doing yesterday is I was showing Ellie, like, this is the type of play, this is the type of interest rate arbitrage play, that levered recursive loop. That type of play, if you run that with like 25 or 30K, that can pay your rent, you know? Like that thing's doing like 80% APY. You do that over 40 days, you make $2,000, $2,200, that can pay your rent, you know? So that type of play is one way that you can live off of DeFi and live off of an interest rate arbitrage play. But you can't really make that work with a relatively small amount of capital. And Ethereum is so expensive that the mainnet is so expensive that you can't even operate on the mainnet as a small retail trader.
No, it's going to
So,
eat up any profit you make plus some.
right, right. So yeah, they definitely with that Glamsterdam upgrade, Mike, they definitely need to improve the block building structure and make the network more efficient, and they need to make it cheaper and it needs to be faster. The block times are 12 seconds. They're like really, really, really slow.
And that's not going to work for large scale institutional use, depending on the use case, of course. There's some 12 seconds is still fast as shit compared to doing like a cross-border payment or a wire transfer in the traditional banking system right now. But still, it's not it's not that near instantaneous that that blockchain is capable of.
Yeah, no, 100%. And when I'm taking a look at the performance of Ethereum, the coin,
Mm.
it's been pretty horrible. I mean, when you compare this, let's see what Ethereum looks like in Zcash terms. How
Oh,
about that?
oh,
Look at this.
yeah,
Ah.
yeah, yeah,
you don't you don't want to be holding this. And so this is what Zcash has done in ETH terms, just ripping.
yeah.
So yeah, I mean, it makes it much more difficult to justify holding ETH if it's going to just underperform, privacy coins. Like, when is that privacy layer coming to Ethereum? Like, why is it that I have to have all of my transactions in DeFi exposed for anyone who wants to be able to see it? And 12 seconds is pretty horrible. Jeff. Oh my God. But yeah, man, just thinking about ETH though. Look, I live off of Ethereum, and um, I would love to see this thing start to perform well, because when it starts really ripping and running, man, all you got to do is hold on for the ride, and this thing can really, outperform everything else. So I'm looking forward to a new bull. I'm really looking forward to a new bull. Now I see what more names and such. You got to go look at Tron versus Ethereum. So the thing about Tron is its tokenomics, the TRX token. So there's a lot of value accrual to TRX. Now you really need to do a deep dive into the validator set for the Tron network. You got to become comfortable with that, because there's risk there. As long as you understand it and you're comfortable with that risk, hey, TRX seems to be continuing to perform pretty well. We can think of a handful of coins, just real quick, that do perform well and have continued to perform well, right? We've been talking about them. Tron, Hype, Tau to a lesser extent, maybe a little bit so far, Canton. Some of the privacy coins have done well, Monero and Zcash. Bitcoin over the last, 10 years has done nothing but go straight up and to the right. Yes, there's been a lot of volatility, but still, it's performed extremely well. There's a lot of digital assets that do perform well.
So we got about 6 minutes before the halfway mark. Let's touch on this before we transition. So we got the regulatory and
There
institutional.
will be no transitioning, Mike.
Definitely not that kind of transitioning. It's at least not on my end. Um, so the line between TradFi and crypto is blurring as major banks stop fighting the trend and start undercutting native crypto firms. So the lead. Morgan Stanley has officially launched crypto trading on its E-Trade platform, charging a fee of 50 basis points. This is a direct attack on Coinbase and Robinhood, undercutting their pricing to capture market share. The SEC shift. The SEC's division of trading and markets issued a statement providing relief for certain covered user interface providers, so wallet software and websites. This allows these entities to operate without broker dealer registration under specific conditions. A major win for DeFi accessibility. Institutional ETFs, spot Ethereum ETFs, have seen inflows of over 11 billion through the first quarter of 2026, proving that big money is no longer just looking at Bitcoin. Quantum safety. The Ethereum roadmap has been updated to include quantum safety as a native side effect of its scaling work, addressing fears of future computing power breaking current encryption. So, this is on the topic of ETH again, where it's showing that a lot of these institutions and a lot of the government regulation, it's moving forward. Yes, there was exploits. Yes, it's revealed a lot of issues that still exist in DeFi, but that is not stopping the forward momentum. It might have shifted it a little bit. It might have given some institutions pause while they reassess. Morpho, we saw that it's seeing some good price appreciation, and I'd have to check about inflows as far as liquidity to the platform, but they are adopting this, and so it's just keeping your finger on the pulse, and that's what we're trying to do here. on the node is, we just try to keep our finger of the just ever shifting, almost, hour by hour pulse of, crypto, DeFi, and, TradFi, and the, retarded fish frog baby that TradFi and DeFi is, creating right now. So right now it's a retarded fish frog baby. At some point, it's going to become a well-oiled machine where it's going to be seamless. There's going to be, for the average user, most people won't even know that they're using crypto and DeFi. They're going to be using their usual banking app, and behind the scenes is going to be the crypto rails. They just might see that there's more opportunities where they can earn yield. They might see that their payments are going through quicker, that they can get paid from their job every hour that they work instead of once a month or twice a month or something like that. So there's just it's going to be almost invisible to most people. And those of us that are in crypto, we're going to understand, why that's happening behind the scenes. And those of us that are investing in good, solid, fundamentally strong projects that are going to be the rails, and the ones that are, curating and that are building out this new financial system, potentially, not guaranteed, but potentially, we are going to be able to profit from that. So with that, we've reached the halfway mark. So, David, what do you got for us?
Okay. So let's see. I don't think that either of the pieces of video content are quite ready yet, but what I do want to hop into here is a little bit about Monero, XMR. So I want to hop in and take a look at this slide deck that I produced on Monero. And I'd also like to take a look at this content that I produced here on Zcash. So Zcash and Monero, those are the two pieces of content that we're going to be taking a look at here first today. I want to start with Monero. This is the one that I want to start with. And I just want to run through the slide deck. Before we do, though, let's just take a look at the token itself, XMR. So XMR USDT, and this is, the price performance of the token recently, basically since the beginning of April, as stocks have run higher. So has XMR, going from $300 to $400, roughly speaking. So it's definitely performed pretty well. But if we zoom out from a 4-hour to a weekly and just take a look at the performance on the weekly, look, this is basically since the spring of 2024, when Monero tagged its bear market lows from last bear. This has done nothing but go up and to the right, which is great. That's what you want to see. So down here at $100 in February of 2024, that's early spring, late winter 2024, all the way up to $400 today. So Monero, looking pretty good. Let's learn a little bit more about it. So, and we were talking about potential privacy stuff on Ethereum at some point in the future, but Monero is this is the architecture of anonymity, right? So let's take a look at this one. This will be interesting to learn about. Okay, so the cryptographic triumph and the financial exile. So, cryptographic triumph, let's start here. Monero has become the industry benchmark for mandatory protocol level anonymity, continually outpacing multi-million-dollar forensic chain analysis firms. Well, that's great. That's the whole point, is that you're supposed to be private. And it says evolving from 16 member rings to full chain membership proofs. So this is really what I want to learn about, because I was reading about this earlier today, and I think yesterday also on X, about how Monero implemented like a really big upgrade recently with FCMP++, full chain membership proofs. So this is really what I wanted to get into in this slide deck. And Monero is the financial exile. It's got there's a hostile global regulatory environment which restricts institutional access because of that privacy. So I don't know what FATF is. Mike, do you know what FATF? It's citing here the FATF travel rule, and then MICA is that dirty communist European regulation.
Yeah.
But implementation force systematic centralized exchange delisting. So what's been so interesting is that Monero has been delisted from I think like 70
The
centralized exchanges.
Financial Action Task Force.
Oh, got it. Okay, so
So
this is
it
how they can, yeah.
It requires virtual asset service providers such as crypto exchanges, custodial wallet providers, and certain DeFi platforms to collect and share personal data for a transaction above a certain threshold. So basically, a draconian freaking rule that governments are putting in place so that they can freaking, you know, impose their will.
Yeah, how about no? How
Yeah.
about no?
How
How
about
about
I one up you? How about fuck no?
how about fuck no? How
Yeah.
about we're not doing that?
How
Yep.
about how about pack sand?
Exactly. And it says here, Monero has been functionally severed from traditional fiat off ramps and global liquidity. And you see, this is the thing I've been saying about Bitcoin is that it doesn't need any institutional involvement at all to continue to thrive. And you can see that with Monero. Monero severed from traditional fiat off ramps and on ramps, global liquidity. But you know what Monero is not severed from? Bitcoin and other digital assets. And with what's that chain called? Thorchain.
Yeah.
Dude, Thorchain is awesome. When we swapped, I think it was like a little bit of ETH for some spot Bitcoin. That's
Mm.
pretty cool. But imagine being able to go from spot Bitcoin to Monero permissionlessly. Well, that's the on ramp and the off ramp right there. So it doesn't matter that the fiat, on and off ramp has functionally been severed because these tokens, these coins continue to function extremely well without it. You don't need it. So here's the thesis. Monero is becoming technologically impenetrable while simultaneously becoming economically exiled as number go up. And Monero has more nodes than Bitcoin does. So Monero is even more decentralized than Bitcoin. Take that in for a second. Isn't that an interesting piece of information? So, okay, what is an orthogonal surveillance channel? Closing orthogonal surveillance channels. Mike, can you find out as I'm reading this, what in the world does orthogonal mean? Is this like orthodontics, like dental? Like, what is this? What does the word orthogonal mean? Um, okay, sender identity, recipient identity, transaction amount. Okay, so sender identity. Oh, I see. This is how Monero solves for these challenges. So, how do you make the sender identity private? It says the vulnerability is that digital signatures explicitly map specific inputs to a sender. Right, they do. And then recipient identity. Here's the vulnerability. Public wallet addresses are permanently recorded on the ledger. They are. And then here's another vulnerability, the transaction amount. Exact transfer values are permanently visible to all observers. Got it. Right. Well, I mean, this is, what everyone, yeah, go ahead.
Alex over on Arena says, think about leakage through RPCs. RPCs like infra, log IP addresses alongside address, amount, etc. And then what I found on the internet was essentially it's a way to monitor or audit a system without disrupting the actual operations or being visible to those on the primary channel.
Got it. Okay. So these are the challenges that public chains, need to be able to solve for, like Ethereum needs to be able to solve for this in some way in order to become more anonymous, more private. So it's not necessarily about becoming secret. It's about being able to choose which pieces of information you disclose to a counterparty or disclose, period, to anyone. Like you should be able to determine if you want your information out there or not, especially your financial information, right? So, all of these, regulatory bodies and governments who want to say, oh, but you've got to comply with our draconian rules so we can steal from you. It's like, fuck you, you know? So, but the only way that you can protect yourself is if you can become more private. And that's why they don't want anyone to have any privacy whatsoever. So let's
Mm.
take a look at this cryptographic shield. So how does Monero solve for sender identity problems? They solve for it with something called a ring signature or ring signatures. And I think that this might be what just got upgraded, Mike, the ring signatures. But let's read about it. So it says it mixes one true spend with 15 historical decoys to provide cryptographic sender ambiguity. And I think that that FCMP might have just upgraded the ring signatures. And I think that if I'm right about that, I think it was like a 100x upgrade in like privacy for sender identity stuff. And then here's for recipient identity. Here's how Monero solves for that. The defense is stealth addresses. So it mandates randomly generated one-time destination addresses derived via elliptical curves. So those elliptical curves, that's the thing that everyone's been, hand wringing about when it comes to quantum being able to break that.
Mhm.
And then here's the transaction amount. Here's how Monero solves for that. Here's the defense. Ring CT. So ring confidential transactions. It says it employs Peterson commitments to homomorphically encode and verify values without revealing them. Okay. All right. Well, we're going to learn more about this as we get into the video content here in a second. So stealth addresses guaranteeing recipient ambiguity. Okay, so this is that first piece. So remember we had the three, the sender, the recipient, the transaction. So here's a little bit more about the stealth addresses for the recipient. So step one, the sender's generation. So this generates a one-time stealth address using the recipient's public view and spend keys. And then you've got this cryptographic engine with a standard base point and a one-time address. And I gotta say, Mike, the guys who work and gals who work on this type of cryptographic stuff, brilliant, absolutely brilliant. Here's step two, the ledger. The one-time address is the only identifier published to the blockchain. The real address is never exposed. Okay. And then step three, recipient retrieval. The private view key scans the chain to mathematically recognize owned outputs. Got it. Okay. So it scans the chain to recognize those outputs that it owns. And then the private spend key authorizes for future expenditures. Okay. So step one, the sender generates a one time stealth address. Step two, the ledger. The one time address is the only identifier public to the chain. And step three, the recipient uses the private view key to scan the chain and recognize its owned outputs. Okay, so I'm starting to understand how this works. Got it. Here's the ring signatures, the needle in a haystack protocol. Oh, I think this is what got upgraded. I think this is like, as of just a couple of days ago, this was the way that Monero operated, but I think that FCMP upgraded this and made it like 100 times better or something like that. So here's a little bit about ring signatures. So the current protocol, and I think that this is the protocol prior to FCMP mandates a ring size of exactly 16. So all 16 signatures appear mathematically indistinguishable to outside observers. So you can't tell. You can't tell what's what. So the historical decoys are sourced randomly from the blockchain. Okay, wow, that's really interesting. So they're like, you know, basically making it very, very difficult to determine or impossible to determine the true spend. Okay, so the double spend defense. You got your key image, a unique cryptographic fingerprint derived exclusively from the true spent output. Okay, and then the mechanism is the network rejects any transaction submitting an identical key image, preventing inflation without ever revealing which of the 16 nodes was the actual source. Okay, so that's the double spend defense. Okay, so Ring CT and Bulletproof S Plus, optimizing amount obfuscation. So the Peterson commitment safe allows a sender to commit to a specific transaction value without revealing it. The decentralized network mathematically verifies inputs equals outputs plus fees. That's homomorphic addition, ensuring no arbitrary coin creation. Got it. Okay. And Bulletproof S Plus optimization table. What is this? It says range proofs prevent malicious negative values, but historically cause severe blockchain bloat. Bulletproof S Plus mitigates this data overhead. Okay, so you got spent inputs, and then you've got current size bulletproof SFS, bulletproof S, yeah, and then bulletproof S plus. So this is in kilobytes. So we're talking about the reduction in size of, and what are we talking about the reduction in size of? Is this just like outputs? It's just, yeah, the outputs, just the outputs, and they're tiny. We're talking about 1.4 kilobytes down to 1.33 kilobytes. Got it. So it says here, the insight is the constant 96 byte reduction per transaction plus 10% computational speed up for wallet generation. Okay, let's see. What is Dandelion? Dandelion plus plus, decoupling identity from network origin. So phase one is the stem phase, and phase two is the fluff phase. So it says here that this neutralizes ISP surveillance and malicious node clusters attempting to map IP addresses to transaction broadcasts. So in phase one, the stem phase, the originating node, remember Monero is made up of, I think, like 26,000 nodes. The originating node forwards the transaction to a single randomly selected peer across a predetermined privacy subgraph. The transaction remains completely hidden, obfuscating its true geographic IP origin. And then after a randomized epoch, routing logic transitions. The transaction is broadcast exponentially across the entire Monero network to be picked up by miners. Wow. So, how in the world could you ever dox a transaction on the Monero network? You can't. You can't. That's so cool. I love that, man. Random X consensus. Oh, you know who would really like learning about consensus here is Mr. Couchet, Colin.
Oh,
Uh,
yeah.
yeah, yeah, he's all about consensus. De- Decentralization as privacy. So here's the core concept. Operational security requires physical validator decentralization, and Monero has that. Centralized mining farms are prime targets for state level coercion, censorship, and regulatory blacklists. Right, right, that's true. But the decentralization of Monero is what allows it to remain private. So you've got this random X solution. Huh, okay. So it says here, adopted December 2019, replacing Crypto Night. Ever heard of Crypto Night before? That must have been a prior consensus mechanism on Monero. It says aggressively ASIC resistant, relies on memory intensive computational techniques and random code execution. Oh, got it. So that's why, when you're mining Monero, did you ever get into mining, Mike? For a while there, I was into, mining ETH in like 2018, 2017, I
I
think, right?
wish I was that early, but no.
Yeah, so I built like a ETH mining rig back, I think it must have been 2017. And then, mining Monero, you use CPUs, mining Bitcoin, I bought some ASICs. Those things were super loud, super expensive to run, and didn't really make much money. Yeah, so it says here it's Monero is ASIC resistant. So I'm pretty sure that you need to use CPUs to mine Monero. So the result is it favors consumer grade CPUs. Yeah, that's what it said. Distributes network infrastructure globally across millions of homes, making jurisdictional attacks virtually impossible. I love it. But you know what? I'm pretty sure that those people in the UK, those politicians in the UK and in Europe, just generally speaking, if they could make this illegal, they totally would. That's what communists do. So the privacy protocol spectrum, this is the market comparison. Great. We're about to hop into Zcash, so this will be interesting. Monero XMR, the privacy paradigm is mandatory by default. It says here for Zcash, it's optional or hybrid. Huh. And then Bitcoin, it says is fully transparent. But if you're operating on a Lightning protocol on Bitcoin, then it can be completely private. So that's one caveat there for BTC. Okay, so for Monero, the core technology is ring signatures, stealth addresses, and ring CT. For Zcash, it's zero knowledge snarks, so zero knowledge proofs. For Bitcoin, we know it's deterministic UTXOs, those unspent transaction outputs. Okay, that's the core tech. Now, network routing. For Monero, it's something called Dandelion plus obfuscation. I think we were reading about that in a previous slide. For Zcash, it says network routing is standard and transparent. Okay, I'm not quite sure that I like the standard transparent network routing. And then for Bitcoin, if you're on the Bitcoin mainnet, on the layer 1, then yes, standard and transparent. But it depends on the type of UTXO. Because if you've got what are those things called again that allow you to mint tokens on Bitcoin?
Are you talking about the Oracle or ordinals?
No, not ordinals, but not Merkle trees. What's the technology that allows you to mint tokens on Bitcoin? Taproot. So if you've got a Taproot asset, it's going to be part of a regular Bitcoin UTXO. So even though the network routing is standard and transparent on the layer 1, if you're actually routing a Taproot asset, it's going to be indistinguishable from regular Bitcoin. So even though it says standard and transparent, that's not exactly how it works for Taproot. And then if you're operating on Lightning, let's say
Alex says not entirely true about network routing for ZEC. Orchard Pool is privacy by default. We have optionality for ZEC.
Perfect. That's great. So I'm happy to hear that this slide right here is incorrect for ZEC, because when I was looking at network routing and standard and transparent, I was like, I don't know that I really like that. So I'm happy to hear that this is wrong. And then market positioning. So Monero, says here, dominates the privacy sector. And I would need to verify those data. For Zcash, it says it's highly favored by institutions for compliance. Huh, interesting. I never would have guessed that. And then for Bitcoin, it says highly traceable, historically tainted coins lose value. So yeah, I don't buy that for a second. All right, next slide. The regulatory squeeze, institutional isolation. Okay, so this is what's been attempted to hurt Monero, but it's actually done the exact opposite. All of these stupid regulators trying to steal money from people with these rules, it's actually done the exact opposite for the protocol for Monero. Number go up. So I love it, man. Here's that, Mike. Here's that FATF travel rule that you described to us earlier.
Yeah.
So here's the conflict. It says FATF Rec 15 mandates that exchanges share originator or beneficiary data. How about no? And Monero's default architecture lacks a comprehensive view key for outgoing transactions, making technical compliance structurally impossible for custodians. I love it. And here's MiCA, the MiCA legislation from those commies in the EU. So EU's markets in crypto assets framework from December of 2025, I think it was earlier than that, actually. I think it was 2024, explicitly classifies mandatory privacy coins as non-compliant assets. Well, of course they would say they're non-compliant assets, threatening exchanges with catastrophic enforcement actions and operating bans. Man, Europe, dude, ugh. And then you got the centralized delisting wave, centralized exchange delisting wave. So here's the result. How many centralized exchanges delisted Monero? I think it was like 70. So
Yeah.
total unceremonious removals from global platforms. Think Binance, OKX, Huobi. These are big centralized exchanges. Kraken forced to halt XMR withdrawals for, you know, uh, unfortunately for clients in these regions, forcibly converting user balances to Bitcoin to retain regulatory standing. Man, see, remember, you guys, not your keys, not your coins. If you've got what you think is XMR on a centralized exchange, if they still exist, and you don't actually own anything. So, got to hold your keys. Got to hold your own keys so that you can tell Micah and Fat F to go F themselves. Here's the synthesis, the liquidity paradox. Monero is the ultimate tool for retail darknet users. It's not just about darknet, though. I can't stand it when it's framed in this way, when it's framed as something that's like, only used for some type of illicit activity. That is not true. That is not true. This can be used if you just want privacy. If you don't want some regulatory body
Well, dude,
or
I mean, there's privacy in the traditional banking system and stuff like that. And, not from regulatory bodies, but why is it such a bad thing to not want your personal transactions, your behavior, financial behavior to freaking be out there? Last time I checked, the government works for us. We don't work for them. We have rights. The government doesn't have rights. That's, I think, something that's been forgotten.
isn't it our right to privacy? And, the government has no right to peer into your personal transactions. I'm sorry, but you can make all the laws in the world that you want, and they can still be unjust. Okay? It's
Oh, just
just the
because it's a
truth.
law doesn't mean it's right.
No, not at all. And,
Oh, dude, there's been laws that allow freaking yeah, I'll drop it.
yeah, we'll
There's
we'll leave that we'll leave that one for the red pill, I
yeah,
think.
yeah.
So here, now that we've basically gone through this slide deck, oh, here's the last thing. I know that Jeff put together some research on Cubic, and didn't Cubic network? Yeah. So this is an existential threat. At least this is what it's being framed as in this slide. So here's the event. The Cubic network applied massive useful proof of work, pooled hash rate, to execute a 51% attack on Monero. I remember when that happened, and I didn't quite understand exactly what that meant for the Monero protocol and for the coin. So here's the impact. It said it captured a majority hash rate, rewrote 6 historical blocks, and orphaned 60 legitimate blocks. Well, that's no good. And the resolution, it was thwarted only by a community-led DDoS attack on Cubic's servers. I love it. The community DDoSed Cubic. And it proves ASIC-resistant CPU mining remains acutely vulnerable to decentralized compute clusters. Oof, okay. So that's something that you got to know, right? If you've got a significant Monero position and that protocol can be, essentially like 51% attacked, and then blocks can be rewritten, that's not good. Um, so, and it also looks like there's some type of quantum threat here. Um, I'm going to leave the quantum discussion for another time. Okay, it says, oh, here we go, FCMP++. This is what I wanted to get to. So there's the ring signatures. So Mike, earlier in this slide deck, we went through the ring signatures. And so you've got 16 decoys and one legit signature, right? But the vulnerability here is it says it's susceptible to EAE attacks and statistical demixing over time. So EAE, where did I see that? EABE. Okay, so this is EABE, not the same thing. But here's, I think that this is the current state now, full chain membership proofs. So it says FCMP utilizes advanced zero knowledge proofs to prove membership in the entire global set of unspent outputs. And says the impact is that it expands the anonymity set from 16 to over 100 million. And it mathematically neutralizes EAE attacks and renders forensic chain analysis obsolete. That's amazing. So, and look, it says that it was audited in the future. You see that? Status audited next week by Trail of Bits. That's so funny, the hallucinations. But Mike, I'm pretty sure FCMP was, it just went live. I think anyway. I'm not positive, but I think it did. Okay. JAM, TIS, and the ultimate dichotomy. So you got cryptographic privacy and institutional compliance. Well, how can you be compliant with any regulations if everything is private? You would have to choose what information to expose and what not to expose. So it says the JAM TIS addressing scheme replaces the crypto note standard and the compliance bridge. This would enable true view only wallets. So that means institutional auditors can verify the complete flow of incoming and outgoing funds without compromising the master private spend key. Okay, so, that's interesting. Monero will undoubtedly persist as the world's premier censorship resistant digital cash system, continually outpacing global forensic surveillance. Yet it remains permanently exiled from mainstream institutional adoption by the very cryptographic perfection that defines its existence. Dude, I love it. I love it. I absolutely love it. This is great. And you know what's not great though? Not having a piece of video content to play. That's not great. So, and over here too, here's Zcash. And this is still generating too. So why don't we take a look here at Zcash? Let's learn a little bit about, one of the competitors to Monero, this Zcash protocol. So, how old is Zcash? How long has Zcash been around?
It's been around
Let's
a minute. I know that.
Yeah, I think you're absolutely right. It's been around for a long time. I just don't know how long. So ZEC USDT, it's been around for a couple of cycles. It looks like, or at least this contract over on Binance has been around for a
I
couple of
w-
cycles
I
here.
went freaking nuts there for a fucking minute.
Oh, I know, dude. Yeah, it went from $50 to what was that, 800 or something? Crazy, crazy. So this one's been through a couple of cycles here. Let's learn a little bit about Zcash. So it says here it's transitioning from a standalone privacy coin into the programmable infrastructure layer for private DeFi. No way, man. That's awesome. Private DeFi. So does that mean that if I hop on over to DeFi Llama and search for Zcash, that I'll be able to see a chain with protocols on it? Really? Huh. So
I
there's
did
no way.
new to me, or it
This,
is, or is it hallucinating?
I mean, well, it says that there are three protocols on Zcash. One of them's a bridge. This is a lending protocol, but it's multi-chain. This is another bridge. Let's take a look at this Templar protocol, whatever this is. It says cipher lending protocol that enables borrowing stablecoins against Bitcoin or any asset on any chain without trusting centralized intermediaries, no wrapping, no bridging, no KYC. Hey, if I could borrow against spot Bitcoin without using a centralized protocol to do that, then that would be great. And if this integrates with Zcash in some way, that could be really interesting. So, but I don't know anything about this. I've never come across this before, ever. So this is called Templar protocol, Mike, and
Hmm.
it looks like you could using near. See that? That's the near icon.
How
So,
deep is the liquidity?
you know what? It's not loading here. Total deposits, total TVL, total borrowed. It's taking a minute here to load, but it looks like if I sort by available liquidity, that there's actually, there's quite a bit. Seven figures, eight figures here. So
Huh? All right.
yeah, yeah. So it's not nothing. Um, okay. So where's Zcash? So where is ZEC? Okay, so USDC ZEC. Does this mean that I can borrow against spot Zcash on Templar or using Templar? Is that what this means? I think that's what this could mean. And it looks like this is using Solana, this is using Stellar. So let's take a look at the Solana. We got 322K of total deposits, 41K available liquidity. And let's just take a look. How does this work? So total borrowed, what chain is this on? What chain is this on? Okay, so mainnet, when I click login, I can connect an EVM chain wallet, a Solana wallet, a Stellar wallet, or a Near wallet, or use a passkey. So, I'm not quite sure exactly how this works, but maybe this is, we should potentially do some type of a deep dive on Templar next. Maybe for some time later on this week. That could definitely be interesting.
Yeah.
Okay, back on over here to Zcash. It says here the core value prop of Zcash is selective disclosure, treating financial privacy as a fundamental human right rather than a default vulnerability. So, it really kind of is a default vulnerability for these public ledgers because it means that, anyone, a bad actor, a regulatory body, a government agency can spy on your personal financial transactions on chain, which I don't know about you, but I don't like that. So, the transparency flaw is that legacy blockchains, they broadcast pseudonymous or pseudonymous balances and behavioral patterns to the public, destroying token fungibility and exposing users to surveillance. Definitely exposed to surveillance. But here's that Zcash shielded model. So the Zcash solution is complete obfuscation of identity and amounts by default, paired with cryptographic capability to proactively share transaction metadata with authorized institutions. I get it. Okay, got it. So you can choose who you share data with. I like that. So the ZK Snark cryptographic engine generates mathematical certainty without exposing underlying data variables. Okay, so this is a little bit different than that Monero architecture. So if we bring it back on over to the Monero slide deck just real quick, I want to just see the difference because I remember that there was an error in this slide. So the Zcash core technology, as we're learning about right now, is those ZK snarks, the network routing. That was where the error was. It's not standard and transparent on Zcash. So I'm pretty sure that we're going to learn about that here in a second. Okay, so Zcash uses ZK snarks. So let's see here. All right, the May 2022 Halo 2 upgrade achieved infinite recursive proving, permanently eliminating the systemic risk of the trusted setup. So the legacy vulnerability, early ZK snarks required a complex initialization ceremony. If colluding participants reconstructed the cryptographic toxic waste, oh my goodness, cryptographic toxic waste, they could infinitely counterfeit ZEC undetected. Huh, okay. And so here's the Halo 2 breakthrough.
It's not a good thing.
I know, right? So by utilizing inner product arguments, IPAs, and nested amortization, Halo 2 allows proofs to verify other proofs. The result? Maximum decentralization, zero toxic waste, and the architectural foundation for massive layer one scalability. Huh. Interesting. Got it. So the dual address architecture creates operational flexibility, but careless cross domain transactions introduce heuristic linkability. Okay. So you've got a transaction matrix, T address to T address. So it's fully transparent, exact amounts and keys uh, and public keys visible, interoperability maximized. Okay, so what exactly is it that I'm reading here? What are we looking at? The dual address architecture. Okay, what is this vulnerability? A 2018 academic study linked up to 88% of bridge transactions by matching exact values and temporal patterns as miners moved funds from the shielded pool to transparent exchange addresses. Okay, so they got doxxed essentially. And the takeaway is the cryptography remains unbroken, but reliance on transparent bridges severely reduces the anonymity set. Uncompromised privacy requires operating entirely within the Z address domain. So, Mike, let me ask you something. Have you ever operated natively on Zcash? Because
I
I have not. I have
never.
not. Yeah. Huh. I've never operated natively on Zcash before, but I would be very, interested to do so. I don't know how. So, what type of wallet would I need? What is a native Zcash ZEC? I want a non-custodial wallet. What is one of those Zcash ZEC non-custodial wallet? I want to see what it's like to operate natively on Zcash. Okay, so it says, oh, I get it now. This is why I was looking up the wallets. So you've got native versus transparent. I think that is this. So T address to T address, that's native, and Z address to Z address. If I'm taking a look at this right, that is okay. So no, Z address to Z address is native shielded, and T address to T address is transparent only. Got it. Okay. So it looks like, on Trezor, I could just use a Trezor. I could use my ledgers. I could use a Trezor. I could use, I guess, Trust Wallet, but I don't trust Trust Wallet. So gonna
I don't
have a hard time.
call
Gonna have a hard time using Trust Wallet if I don't trust them.
it right.
Um, and it says here, if you want to use Zcash's privacy features, I'm just reading something from Gemini real quick. It says you should choose a wallet designated specifically for the Zcash ecosystem. So there's one called Zashi. Zashi. I think that this is the official one, developed by the Electric Coin Company, the creators of Zcash. What a name, man. Electric Coin Company. Oh, Zashi. So here, give me a link to Zashi. Zashi. I want to see if I can just get this wallet real quick and see what it looks like because user experience is super important. So it looks like App Store or Google Play, but I don't think that there's like a any type of an extension. There might be. There might be an extension somewhere. Maybe, yeah, it looks like, okay, so I'm going to have to download this on my phone and test it out on my phone there. That's fine. But if it keeps talking about, like DeFi on the Zcash protocol, I'm just curious, what type of DeFi? So the privacy coin trilemma, Zcash prioritizes highly scalable, programmable cryptography over rigid absolute anonymity. So which one do you prefer, Mike? Do you prefer, Monero or Zcash?
I
That's
know
the
I know Zcash. We've interviewed him a couple of times. Why is his name eluding me? From Canton.
Shaw.
Yeah, Shaw Kafur. He was one of the ones that helped author the initial paper for ZK Snarks.
Right, the library.
Yeah.
The library, yeah, that's right.
So no, I mean it's probably I would say Zcash. Monero has had a rough go of it. It's and not to say it's a bad project or anything like that per se. Because I mean I'm not deeply entrenched, and knowledgeable on the project, so I don't want to make any sweeping comments. But Zcash has been solid. I haven't heard anything negative about Zcash really.
Yeah, neither have I. And I'm actually quite curious to learn more about what DeFi on Zcash would look like. But it says here that Monero's rigid default privacy makes it a primary target for regulatory crackdown. So obviously, yes, it does, because we saw Monero get delisted. All of these different, arbitrary regulatory bodies say, "Hey, you need to give us all your information so we can steal from you." And Monero says, "No, sorry, can't do that by default." But Zcash is not necessarily like secrecy in the same way that Monero is. It's more about, it looks like, privacy, where you can determine which pieces of information to expose to a third party. That's the way it looks to me.
Well,
So,
and Ray makes a good point. Zcash has its total supply is only 16.66 million, and max
Zcash's supply, where
and
do you see that?
and the max supply is 21 million.
Oh, yes. Yep. The supply model.
Yeah,
Um, yeah, well, I mean, both of these. And what about Dash? I
let me
haven't
look that up.
really heard much about Dash in a long time. This is one of those, I think, one of those ancient dinosaur coins. Um, I think, hasn't this one been around for a long, long time?
Uh,
It's up a little bit today. Up Dash today, Mike, up 40%,
if
40% today,
if this is the one, I
or
mean,
40% over the last week, 11% today.
what's the price on it?
$54 for
Okay,
Dash.
yeah, so this is the right one. Total supplies, total circulating supplies, 12.68 million, max supply of 18.9 million.
Yeah,
Interesting.
so yeah, just interesting to think about it looks like these are probably the three leading privacy coin protocols here: Zcash, Monero, and Dash. But you can have true privacy on Bitcoin layer twos and kind of sorta on the layer one with Taproot. So that's just something to keep in mind. Um, I'm all about sovereignty and privacy. And so I really, really am very interested to learn more about DeFi on Zcash and how we could build a protocol on Zcash. That would be really interesting to me. Okay, so it says here the November 2024 halving, and this is for Zcash, executed a severe structural supply shock, enforcing a mathematical disinflationary monetary policy. Okay, so this is the emission step down chart for the Zcash protocol. So in October 2016, oh wow, so it launched around the same time as Ethereum. Initial block reward 12 and a half. In November 2020, that was the first halving event. So the block rewards dropped from six and a quarter to three and an eighth. Looks just like Bitcoin, right? And then November 2024, the second halving, rewards dropped from three and an eighth to 1.5625 per block. So this is modeled directly on Bitcoin's 21 million hard cap. Great network upgrade. But you know what? Just because it's modeled on Bitcoin's hard cap doesn't necessarily, because Bitcoin's 17 years old. It's not like Bitcoin has been around for 100 years and this model has proven itself to survive. Because what happens if miners are no longer incentivized to keep their machines plugged in and turned on and continually refresh them? Because there needs to be enough transaction volume on these chains to incentivize miners to keep their machines turned on. When the rewards, here they're referred to as emissions, when these block rewards step down to nothing, what is going to incentivize miners to keep their rigs turned on? And how exactly is Zcash validated? Like how do miners use ASICs? Do they use GPUs? Do they use CPUs? How is this done? It's a proof of work chain, so it's got to be using what ASICs? There's, I guess, Zcash ASICs. I'm not sure. Um, that would be interesting to know. The Treasury, this is again for Zcash, the Treasury has algorithmically evolved from guaranteed central subsidies into a decentralized community controlled lockbox. Oh man, okay, well, I'm not quite sure that I like the idea of the Zcash Treasury being a community controlled lockbox. What happens the you know what I mean? Like, what
Yeah.
happens when you get the tyranny of the majority and they
I'm
decide,
not a fan of DAOs. It's too easy for if for anybody of any kind of size. I mean, we've seen it with a lot of these protocols where it starts out as a DAO and slowly the founders or the organization behind the protocol end up holding the majority, or at least have enough with a couple of other larger holders. They basically do whatever they want. And so yeah, I wouldn't be cool with doing something that was, even if it was evenly distributed. I don't want anything that other people have a vote or a say in, my kind of my investment, or I don't know. It's
so here's something to think about. Why would governments not want their citizenry to be able to maintain privacy in financial transactions?
because they
What
lose
they're
power,
what they're going to say
control.
is, we got to protect the children.
Oh,
It's
yeah,
it's
no, it's always about
Kate.
safety. Anytime that they want to take away like rights, like gun rights, anytime they want to take away any kind of rights, it's always under the guise of safety. We know what's best for you. Let us protect you. We're the government. We're here to help.
Right. And so, what they're going to say is, "Oh, well, we got to make sure no money laundering." Well, dude, like, money laundering takes place with cash
Yeah.
and gold more than it does with any digital asset.
Well, and that's that stupid narrative that was going viral for a while, that Epstein was involved with Bitcoin, and it's the pedophile coin. And I'm like, really?
That's
Like,
retarded.
you don't think cash for for decades, for that matter, for thousands of years, you don't think fiat has done that like in mass? It was such a stupid narrative.
It really is. But the thing is, though, is that when you got those legacy media outlets globally pumping the same thing, the same narrative over and over and over again, when people hear the same lie enough times,
They
they
think it's
start
true.
to they start to believe that shit,
Yeah.
you know? So whether it's, KYC or AML or save the children, it's all the same stupid bullshit. It's, how do we strip our citizens of their rights? How do we strip them of privacy? How do we steal from them?
Yeah.
That's the whole point, man. And these regulatory frameworks, they are abhorrent, abhorrent. So cryptographic, this is back to Zcash. Cryptographic viewing keys bridge the gap between uncompromised base layer privacy and strict institutional fat fuck compliance. What does FATF stand for again? Okay, so it looks like Zcash, you can choose to disclose information about your transactions if you want to. So while Monero's architecture makes compliance impossible,
Well,
really.
and that's fine if you choose to do it. That's your choice, but it shouldn't be a blanket. Where like an institution or a government is allowed to mandate or dictate that they should be able to see everything that you do personally.
Yeah, but here's the thing though, that selective disclosure, citizens are going to be coerced into doing that, depending on the region of the world that they live in. So that's
and,
just
and
one
that's
thing
and that's
to think
definitely
about.
a strong possibility. But I mean, that's still at least a choice that they have to make.
Yeah. And it looks like in 2026, there was some type of a reversal. So, this capability, so the ability to selectively disclose, allowed major exchanges to legally satisfy AML obligations and resume their Zcash trading pairs. So, compliance and privacy are not mutually exclusive as long as the regulators can peer into the transactions that you have, done whenever they feel like it. So, that selective disclosure, I'm not sure that I like that. Um, so, here's a network upgrade 7, NU7 introduces Zcash shielded assets. Got it. Okay, so this is like being able to mint tokens. So Zcash shielded assets transition ZEC into the foundational gas for private DeFi. So whenever you see like an asset minted on a chain, I think stablecoins, I think RWAs, I think, tokenized BTC or something else. So this is really, really cool. You don't see anything like this on Monero. So permissionless issuance, I love that too. Permissionlessness is what I'm all about. NU7 enables the creation of custom tokens directly on the Zcash blockchain. How cool is that? That's awesome. So shared anonymity. Every minted asset shares a single anonymity pool with native ZEC, exponentially increasing the metadata shielding for the entire network. Awesome. And the economic metamorphosis. Every private transfer, mint, or burn of a ZSA will require, so ZSA is Zcash shielded asset. We've got to do a deep dive into Zcash shielded assets next time, Mike. Will require ZEC as a transaction fee, completely altering the tokenomics to drive constant ecosystem utility. This is what Bitcoin needs. Bitcoin needs this on its layer one because you need the transaction volume, I think. So, cross-link protocol. So, Mike, we've got 5 minutes left, and we weren't able to get through any of the video content. So, I really want to just watch this. It'll bring us over time, I think, by like 5 minutes. But this is by 3 minutes. But this is the piece of content on Monero, and I really do want to watch this. So let's check this out, man. Let me know if you can't hear it.
Can't hear it.
Okay, got it. Let me go ahead and stop that screen share, start it back over, make sure, and audio is always turned on, but for some reason it just only works when it feels like it. Oh, whoops. There we go.
Let me let me
Yeah, it's
mess
not
with it. I know all the little
awesome.
bugs. There you go.
Great. Let's go ahead and play this.
When we look at standard distributed ledgers like Bitcoin, we see absolute transparency. Every transaction records the sender, the receiver, and the exact monetary amount on a public ledger for the entire world to see. This transparency removes a core property of money, fungibility. A currency is only fungible if every unit is mutually interchangeable and possesses an identical history. Because transparent ledgers allow forensic firms to trace tokens back to mixing services or illicit activities, institutions routinely blacklist these tainted coins, destroying their value on the open market. Monero was engineered to solve this specific flaw. It operates as a censorship resistant digital cash system, guaranteeing fungibility through mandatory protocol level anonymity. Competitors like Zcash offer privacy as an optional feature, allowing users to choose between transparent or shielded transactions. Because the vast majority of users default to the transparent, low-fee option, the shielded pool remains small. Monero enforces obfuscation for every transaction, creating a massive homogeneous anonymity set where no single transfer stands out. Yet the assumption that Monero is absolutely untraceable is mathematically false. Intelligence agencies and well-funded surveillance firms actively exploit structural vulnerabilities in its cryptographic model. Forensic chain analysts do not look for definitive cryptographic proof. They use statistical deduction to identify wallet application bugs and narrow down transaction variables. By applying these heuristics, firms claim to provide usable investigative leads in approximately 65% of Monero cases. To survive state-sponsored chain analysis and the approaching reality of quantum computing, Monero is transitioning to a new cryptographic standard. Slated for security audits in May 2026, the FCM-P++ upgrade replaces the current ring signature model. To understand why this upgrade is necessary, we must first reverse engineer Monero's 3 foundational layers of cryptographic defense. The first architectural requirement for private digital cash is obscuring the recipient's identity from the public blockchain. Monero resolves this exposure vector through stealth addresses. Unlike transparent networks, a Monero user's published public address never actually appears on the chain. The wallet independently generates a one-time destination address. The sender merges a random scalar with the receiver's public view key. This mathematical operation produces a one-time address. Because it uses random scalars, no observer can link this output back to the actual identity. The receiver simply uses their corresponding private view key to scan the ledger and claim the funds. With the recipient shielded, the architecture must next obscure the origin of the funds, the sender. In standard blockchains, a digital signature explicitly maps a specific input to a specific user. Monero disrupts this link using Borromean ring signatures. The network consensus rules mandate a strict ring size of 16 for every transaction. The wallet takes the true unspent output and aggregates it with 15 obsolete decoys from the historical timeline. These 16 inputs form a single cryptographic signature. To an outside observer, all 16 signatures appear mathematically identical. There is no proof identifying the true spent output. To prevent users from double spending coins under the cover of this anonymity, the operation simultaneously generates a key image. This unique cryptographic fingerprint is derived exclusively from the true spent output. The network tracks these key images, rejecting duplicates without ever revealing the true source. The protocol has hidden who sent the money and who received it. However, the architecture is useless if the exact monetary value of the transfer remains visible. To conceal the amount of Monero being transferred, the protocol deploys Ring Confidential Transactions, or Ring CT. Ring CT leverages Peterson commitments to hide transaction values. By utilizing the mathematical property of homomorphic addition, the decentralized network of miners can verify that the total inputs perfectly equal the total outputs, without the protocol ever revealing the internal numerical amounts. This introduces a mathematical risk. If bad actors manipulate these commitments to mask negative values, they could artificially create coins and inflate the circulating supply. The network secures against this using zero-knowledge range proofs. These proofs provide mathematical guarantees that all transaction output amounts are strictly non-negative. Historically, zero-knowledge range proofs were computationally heavy. Bulletproofs Plus drops the size of a one output transaction from 1.42 kilobytes to 1.33, and a two output transaction from 1.92 to 1.83. This upgrade yields a 96-byte reduction per transaction and a 10% speedup, mitigating blockchain bloat. This tripartite system, stealth addresses, ring signatures, and ring CT, creates on-chain opacity. But its reliance on a finite pool of 15 decoys creates a structural vulnerability that surveillance firms exploit. Tracing Monero is not a definitive science. Unlike Bitcoin analysis, which relies on deterministic clustering, Monero tracing is a probabilistic science of systematic elimination. The most prominent threat to Monero's localized ring signatures is the Exchange Alice-Bob exchange attack, or EABE. We map this with centralized exchanges flanking an isolated private wallet owned by Alice. The exchanges record exact serial numbers of Alice's transactions. When Alice spends funds, her wallet selects decoys. Forensic analysts monitor the intersection of these outputs moving between the exchanges and private wallets. By cross-referencing their internal databases with the public ledger, analysts systematically eliminate decoys. Once the false outputs are removed from the ring, they isolate the true transaction origin with a high degree of statistical probability. This forensic vulnerability is compounded by network layer exploits. Intelligence firms operate clusters of malicious nodes to harvest transaction broadcast metadata, linking on-chain activity to physical IP addresses. Against globally positioned adversaries operating thousands of surveillance nodes, a localized anonymity set of 16 is no longer mathematically sufficient to guarantee privacy. To neutralize the EABE attack and the looming threat of quantum decryption, the Monero protocol is executing an architectural transition. Scheduled for May 2026, full chain membership proofs mark the total deprecation of traditional 16-member ring signatures. Utilizing zero-knowledge curve trees, this construction proves membership in the entire global set of unspent outputs. The anonymity set expands from 16 to over 100 million. Concurrently, the network is developing the JAMTIS addressing scheme. This upgrade introduces view-only wallets that allow auditors to independently verify both incoming funds and outgoing spent outputs without compromising a user's private spend key. Mathematically, these upgrades render statistical demixing obsolete. By stripping chain analysts of their ability to isolate decoys, Monero secures its technical privacy model for the next decade. Yet, this presents a paradox. The JAMTIS compliance features allow institutional auditors to verify the flow of funds, but they arrive after global regulators have already moved against the protocol. Global financial authorities operate under the strict mandates of the Financial Action Task Force Travel Rule. This framework requires institutional custodians to collect and share detailed beneficiary information for all cryptocurrency transfers. Monero's structural opacity violates these reporting requirements. The European Union markets in crypto assets legislation explicitly classifies mandatory privacy networks as non-compliant assets, forcing exchanges to either delist them or face enforcement actions. This regulatory friction triggered a wave of exchange delistings, including platforms like Binance, the global exchange OKX, and Kraken across the European Economic Area. This isolation creates a permanent liquidity paradox. With major fiat off-ramps severed, large-scale capital cannot enter or exit the asset without catastrophic price slippage. Monero has succeeded in engineering the world's most mathematically impenetrable digital cash system, but its uncompromising cryptographic perfection has exiled it from mainstream financial markets, forcing it to function strictly as a highly illiquid, underground parallel economy.
Yeah, and number go up anyway. I love it. So I think, Mike, for tomorrow, what we can do is we can actually run through the Zcash video content. That'll be interesting. Maybe we can start off the second half of the call tomorrow with this video content on Zcash.
Absolutely.
Yeah, man. So I love learning about these privacy coins. That stuff is great.
No, we definitely need to dive more into it because it seems like that the way that crypto is moving, everyone is starting all these projects are starting to move towards the more draconian controls of government and compliance and things like that. So I think anchoring ourselves in these projects like Monero and Zcash and Bitcoin, I think it's going to become more and more important and be an opportunity for us. So with that, it just like Ellie posted here. Don't miss the blockchain report with Jeff immediately after this show. He will be. It's a pre-record, but great content. And then, of course, if you want to come over to the Node.pro, you can find everything the Node. And we'll see you. David's daily market wrap will be today at 4 p.m. Eastern, and he'll just go over some like 15 to 20 minutes of charts. So jump in there if you want to take a look at your project. And if you don't catch any of those, we'll see you tomorrow again right here, same bat channel, same bat time. Until next time, Veteran Crypto out.
Peace.